discussion on Chapter 8. Chapter 8 is dealing with companies, and we're going to look at question 8.15 in your question book if you want to follow on that. Like with all the other questions, we have a look at the required part first. In this A instance, they ask us to prepare the statement of changes in equity of Sugarbush Limited for the year ended 31 December 20.6. Now, a statement of changes in equity for a company specifically can become a very extended document because equity items in a company can consist of a number of items. It's not like with a sole proprietor where we only have capital and drawings, or with a partnership where we only have capital and drawings. So if you have to draw up a statement of changes in equity, you have to consider all the possibilities for a statement of changes in equity. Possibilities include share capital. We can have ordinary and preference share capital. So these will always be the first columns of the statement of changes in equity. Then if we had a par value shares, which we cannot issue anymore according to the New Companies Act, we might have a share premium column in here as well that will be converted to no par value shares. So in this case, we only had ordinary and preference shares, and then we deal with all the other types of equity after these share capital accounts. The other possibilities is your retained earnings. Because a company is a legal entity in its own right, they can keep profits and be taxed on the profits as the entity, so we will always have a retained earnings account. After the retained earnings, we will have all our other reserves. This can include, but is not limited to, the revaluation reserve, the asset replacement reserve. Those are reserves that you will encounter in your first year of accounting. And then right at the end, we have the total of all of these columns. In my explanation, I will not include the total necessarily. It's just adding up all of these columns in each of the instances. In this statement of changes in equity, we're also going to have a reconciliation of the balances at the start of the year with the balances at the end of the year. So the details here will differ for each company, for each financial year, but we will always start with balances at the start of the year of all the items and balances at the end of the year for all of the items. In our specific question, we also in the B part have to disclose the note for share capital of Sugarbush Limited for the year ended 31 December 20.6. Now for share capital, this note is very important for prospective investors. So they would like to know not only the issued capital, but also the possible capital that can still be issued. So we're not only going to show in the note our issued capital, we will also include a section for the authorized capital. This is what the company was registered with when it was incorporated by the Companies Act and the Registrar of Companies. So we're going to have two sections to our note for the year, authorized and issued capital. So if we have our framework sorted out, we can start to read through the given information and earn the marks as we read through. Sugarbush Limited started its trading activities on the 3rd of February after a certificate to commence with business was received. The financial year end of the company is 31 December every year. Then they tell us that Sugarbush was incorporated with the following authorized share capital. And if you had a look at your required part, first of all, in your required part, they asked us to do the note, and we already discussed that we're going to show them what this company was authorized with. This is the maximum number and type of shares that this company can issue during the life of the company. So they mention 400,000 ordinary shares of no par value, so there's no nominal value linked to these shares. This is in accordance with the New Companies Act. So we're going to include 400,000 ordinary shares as our authorized share capital in our note. So in the note, you will see they included 400,000 ordinary shares of no par value. Remember, this certificate to commence with business is only a piece of paper. There is no flow of economic benefits. So there can be no rand value because we have no economic benefits yet. There's no rand value for the authorized capital. They also tell us that we had 100,000 cumulative preference shares of no par value. And here they give us the fixed annual dividend of 15 cents per share. This is unique to a preference share. Ordinary shareholders, they will have to wait until a dividend was declared, while preference shareholders, they have a guaranteed value for their return on investment. We also had 150 normal preference shares of no par value. So both of these different types of preference shares will also be included in the note as part of the authorized share capital. So this is just providing information to the interested parties on possible shares that can still be issued by the company at a later stage. The following shares were issued directly after incorporation and have already been recorded. So here they give us information for the opening balances in the statement of changes in equity. They tell us that they issued 150,000 shares at 3 Rand each. So the 150,000 times the 3 Rand will give us our opening balance in ordinary shares of 450,000 Rand. There we have the balance at the start of the year, ordinary shares, 450,000. Then they also say that we have issued 100,000 cumulative preference shares at 3 Rand each. So in our preference share capital column, we amount to the 300,000 Rand value. Remember, as soon as you've issued, there was a flow of economic benefits resulting in debits and credits. So we can now include that amount. Retained earnings amounted to 88,000 on the 31st of December 20.5. Remember, we are doing this statement for the year ended 31 December 20.6. That implies that the 88,000 is the opening balance for my retained earnings in my statement of changes in equity. The following transactions and events occurred during the 20.6 financial year. So as we read through the given information, we're just going to decide which of these transactions will influence which of the columns, if any, in our statement of changes in equity. We're going to write a description on the left-hand side and include our values on the columns. On the 5th of May, a further 200,000 ordinary shares were offered to the public at 3.50 Rand each. Now, offering to the public by means of a prospectus is just a piece of paper. There's no flow of economic benefits, so I will not have debits and credits for this. I will, however, need this information to determine how many shares I issue later on. Remember, what I offer is limited to what I have authorized. Okay, so I can offer 200,000 because of the 400, I've only issued 150. So this is still fine. I can offer limited to what I have authorized. If I then issue shares, the issue is again limited to what I offered. I can't dish out more shares than what I offered to the public. That's why this information is important. On the 31st of May, applications for 316,000 ordinary shares were received by the closing date for applications. Us as a company do not have control over the applications. So this cannot be limited to anything. This is applied by the public out there. Yeah, I do receive economic benefits, so I'm going to debit bank and I'm going to credit the application and allotment account, which is a temporary account. We do not have a column for application and allotment as it is not classified as equity yet. So this transaction will also not influence my statement of changes in equity. If we now get to the 1st of June, the directors allotted the maximum number. Now these two values become important because the maximum number of ordinary shares is limited to what I offered. Even though I received 316 applications, I can only issue limited to what I offered. Can you see why this information was important? Okay, they returned the surplus application money as well. So now we're only going to account for, in the statement of changes in equity, the heading that we do have. So we do have an ordinary share capital heading. So I will only take the 200,000 ordinary shares at the issue price of R3.50 because that is my maximum number of shares. So 200,000 times R3.50 will give me the 700,000 Rand that I put in my share capital column. And I write a description on the left-hand side, the issue of ordinary shares. Now we continue reading. On the 12th of August, the directors of Sugarbush Limited suspected a considerable increase in the value of their land, which the cost was 500,000, but the suspicion was confirmed by a valuation of 900,000 by a sworn appraiser. So we've got 900,000 that we want to account for because they decided to account for land at revaluation amount. So now we have to compare the new valuation with the accounted for entry. And that will give us a difference of 400,000 Rand. I need to increase the value of land, so this will be a debit in my land. And for every debit, I need a corresponding credit. They did not tell us that the sworn appraiser gave us that money, so the credit can't be bank. Please don't make that your default. In my basic accounting equation, if I have an increase in assets and there's not an increase in liabilities or a decrease in money, I will have to credit some or other equity item to get my basic accounting equation in balance. So this credit will go to the revaluation reserve. We already have a column headed revaluation reserve. We started out with nothing in the revaluation reserve, and now we have to increase this reserve with the 400,000 Rand that we just calculated. Now this revaluation, because it was an increase in equity, can be classified as comprehensive income. And you will remember in our statement of profit or loss and other comprehensive income, we've got our profit for the year, which is the normal income and expense items, and then we add the comprehensive income to that. So this 400,000 increase will have to be included together with the profit for the year. So I'm going to write an entry here for other comprehensive income, which is the 400,000, but that has to be combined with my other profit as total comprehensive income for the year. So we put the 400,000 in that column, but that has to be combined with the profit for the year. If we then continue reading, they tell us on the 28th of October, 150,000 preference shares, now these are non-cumulative, were offered to the public at R1.60 each. Again, what we offer is limited to what we have authorized. So our offering is intact with the authorized share capital. This is only according to a prospectus, which is a piece of paper, no debits and credits for the offering. If we go over to December the 15th, by the closing date for applications, we received applications for 150 shares, debit bank, credit application and allotment. We do not have a column for application and allotment, so we cannot enter this in the statement yet. On the 20th of December, they inform us that a dividend of 18 cents per ordinary share was declared, 18 cents for the ordinary shares, declared to all ordinary shareholders registered on the 30th of December. There were no dividends outstanding from previous years. Now, ordinary shareholders can only get dividends as soon as we declare the dividends, but they are second in line. The preference shareholders, for which we promised 15 cents per share, They get their 15 cents before the ordinary shareholders can get their 18 cents. So if you get a declaration of an ordinary share dividend, you need to know that the preference share dividend has also been paid already. Ordinary shares at 18 cents per share. So I cannot work with the value of the ordinary shares. I cannot work with the 450 and the 700,000. I need to convert the rand value to number of shares. We started off with 150,000 ordinary shares and we issued another 200,000 ordinary shares. So my number of ordinary shares amounts to 350,000, which is the 150,000 that I started out with plus 200,000 number of shares issued later. All of this multiplied with the dividend per share gives me the 63,000 Rand ordinary share dividends, but they are second in line. Therefore, I need to calculate the preference share dividend as well. Preference share dividend is also stated as a value per share. They told us 15 cents per share. So again, I can't work with the values here. I have to work with the amount of shares. You remember that was cumulative and these were ordinary preference shares. So let's first deal with the 300,000. That was 100,000 cumulative preference shares. So I'm going to take the 100,000 shares multiplied with 15 cents per share, and that gives me the 15,000. For preference shares, if we only had the shares for a specific amount of months, I would have to proportion this for something out of 12. For the cumulative preference shares, we had them the whole year. If we go to our normal preference shares, they were issued right at the end of the year. Remember here we only received applications at the closing date, and they told us, very last item, all the 150,000 preference shares were allotted. So this is on the 31st of December. So if I wanted to calculate a dividend for the preference shares, it will be on the 150,000 shares at the promised dividend of 20 cents, but I had them for no amount of months in the current year. So there's no preference share dividend on the ordinary preference shareholders. So this 78,000 is the ordinary dividend of 63 plus the preference share dividend of 15,000. And this 78,000 can only be deducted from the profit for the year. That is the distribution of the profits to the owners by means of dividends. Okay. They mention in the last instance, the after-tax profit for the year ended 31 December was correctly calculated as 116,000. After-tax profit, because we are dealing with retained earnings. Retained earnings implying this is what we can retain in the company, what we can keep. We can definitely not keep our taxes. So the amount that you put in for profit for the year is the profit after the deduction for tax. After I've paid SARS, I can pay my shareholders their dividends. So this will always be the profit after tax. If I now can complete my statement of changes in equity, I've included descriptions of all of the amounts that I included and included in the total column. So at the end of the year, the balances of all the ordinary shares, preference shares, and my reserves, retained earnings and revaluation reserve, this will be my total equity in my statement of financial position. I hope that this was beneficial to your knowledge of companies and the statement of changes in equity, and I hope to see you again for the next video clip.